Hi, and welcome to this week's edition of the Retire Happy Money Minute. Today I want to talk about volatility. We've over the last couple of months on the Money Minute, we've talked about changes in the Fed, changes in inflation, and some of these other factors. And they all seem to be coming together right now here as we approach the end of the year. We're seeing a rotation, according to Barron's, out of more risky assets and into less risky assets. And you can certainly see that with some of the big names like Tesla, DocuSign that have really appreciated, Zoom, and people have been taking profits from these high flyers. And the stocks that we're seeing people move into are maybe a little more staid, older names like Procter and Gamble, J.P. Morgan Chase, Goldman Sachs, folks like that. So there's definitely a risk-off type of movement going on. So if you've got big gains that you've enjoyed here over the last few years in some of those high flyers, they might be a little ahead of themselves, and investors are definitely nervous. So with the Fed announcing they're accelerating their reduction of buying these risky assets that they've been supporting the market. The taper is going to be finished in March instead of May, so they won't be buying assets every month after early March. And they've announced that they're likely to raise interest rates 3 times next year, starting in the late in the first quarter or sometime in the second quarter. So all of those are combining to create some volatility and motivating people to take profits. And I encourage you to consider that as we move into the year's end. We have very low tax rates on capital gains right now. So if you've got some of those, think about harvesting them. If you haven't refinanced, beat the increasing interest rates and take advantage of that. Have a great end of the year. Happy New Year to one and all. And here's to you having a very happy retirement.